video was inspired by the notion of being called naive and foolish for doing Uber and Lyft. What I'm going to do in this video is go over the common misconceptions as to why people assume Uber and Lyft are a scam. The first reason people think Uber and Lyft are a scam is because of the whole earnings claim. In fact, the whole fuel to this fire of a scam claims are because of the earnings claim. Uber will make a claim to earnings in gross terms, which means it's before anything else is taken into account. Gross is the top line item. Although it's not unheard of to hear someone claim that you can make $100,000 doing ride sharing, the reality is most drivers do not drive that much to make those kinds of earnings. In fact, most drivers are part-time drivers. In another video to come, I'll go over exactly how do you calculate the amount of rides you need to do in order to make the income you are looking for. In fact, it's actually a very simple math, and I'm looking forward to doing that video for you. As I said before, the earnings are often used in gross earnings and do not take into account other business expenses. And these business expenses are beyond just gas. So what exactly are the big line items that come under scrutiny of the public? Well, it's very easy. It's going to be depreciation and taxes. These are the ones that everyone talks about. I'll talk about taxes first, as it's the most relevant at the time of this recording. The money you make today, you have to pay Uncle Sam tomorrow, which sucks. Being an Uber or Lyft driver, you're an independent contractor. So you're not a W-2 employee, you're a 1099. So they'll send you the 1099 via the app. And I just got mine this past year. The next reason people are skeptical of drivers' earners claims is they do not take into account depreciation of the vehicle. Depreciation is a very important expense. As I was saying, depreciation is a very important expense. Depreciation can often be seen in two different, very distinct ways. One being that, hey, I don't plan on keeping my car and it's losing value. This is important to note. This is a very important note that you should not drive a vehicle you plan to trade in as a ride-sharing vehicle. This will actually destroy your car fast, and you won't get much for your trade-in value. The view I take is number two. Depreciation is helping me at tax time, so Uncle Sam doesn't get my hard-earned money. I hold this view because I like to drive my car until it can't run anymore, or to the point where it's nickel and diming me to death. I can give a clear example of this, being that during my college years, I would commute to college in my 2003 Toyota Corolla. It had nearly 300,000 miles on it by the time I was done using it, and when I went to go trade in, it literally had no value left. No dealer would give me any money for it. The next claim that people claim that Uber or Lyft is a scam is that you have to be a full-time driver to actually make money. It's important to note that more work does not equate more earnings. You actually have to work smarter, not harder, to actually make money doing Uber, and you don't have to be a full-time driver. In a future video, I'll go over how to make less drives and make more money. And then the final misconception I'm going to go over to why people think it's a scam is that the money is not consistent. And the answer to this is the majority of riders these days are using both Uber and Lyft, and they're price comparing before they choose which app they want to go with to book the ride. So you have to use both to make sure that earnings are consistent. I want to thank you for watching this video, and if you're interested in doing ride sharing, I suggest signing up below for both Uber and Lyft.